Hey everyone, this is Kirk here again at Option Alpha. So welcome back to another podcast episode. And this one is actually a podcast episode that we're doing a video on as well because we're talking all things gamma, gamma levels, gamma exposure, how you can use it, what you should look for, how you can use it around your trading. Got the perfect guest for you here today. That's Lex from Tradier. I've known Lex for a long time. I've talked with Lex. I've spoken on stage with Lex. I've met him in person many times. He is a wealth of information. There was nobody else that I thought you could talk to and get this party started with Gamma than Lex. So we're going to bring him in here and talk about all things Gamma today, and then we'll kind of wrap it up at the end. Quick little story, just as like a sidebar for this. So we often, my wife will not let us get any animals. Okay. So like she's no animals in our house at all. Okay. And I like animals. Like I grew up with cats, dogs, whatever. And so I will often take my kids to the pet store to pet animals that are there. Okay. And so we go there. This is like, I don't know, a couple months ago, we go there and there's these 3 cats that are there. Right. And you could like hold them at the pet store or whatever and like, love up on them. So there's 3 cats, 3 different colors. And I was like, well, what are the cats' names? I got 3 kids. So the lady was like, oh, they're perfect for your kids. I was like, listen, my wife won't let it happen. But I was like, well, what are their names? And the lady goes, well, this one's Delta. And I go, oh, okay, that's interesting. And she goes, and that one's Theta. That's the brother. And I said, you are kidding me. And I said, kids, if this other one's name is Vega, we're out of here. We're going to take the cats. And she's just going to have to deal with it. Like she's going to have to deal with it. And they go, this one's name is Gamma. And it was a black cat. And I was like, that's it. We're done. I can't.
Oh my God. Is she in the options somehow?
No, it was just, that was the three cats. They were brothers, all brothers. And it was
Right.
Delta, Theta, and Gamma. And I was like, well, the black one was Gamma. And I was like, well, that's pretty fitting. It's like a black box for all of us. We have no idea this like scary thing.
Oh my
So
God.
anyway, so that was the short story on Gamma. And I was trying to explain to my kids, I was like, well, these are, cool concepts that you can learn about later in trading. They had no idea. They're like, just
That's hilarious. Oh
all
my
right.
God.
So listen, so we're only going to be talking, not only, but
Yeah.
the reason I want to talk to you, like I said, is because I want to talk to you about Gamma. So Gamma is hot topic for a lot of traders. I
hmm
think it's more of a hot topic, I think, for the 0-1 DTE type trader. But I
hmm
don't know. But I'm coming to you because I know this is like your wheelhouse. This is your, something you are much better versed in than I am. So I'm going to come at this from the perspective, hopefully, of an option alpha user who's new or newish to trading. They maybe get some of the Greeks, right? But they know there's this thing called gamma and there's gamma exposure and there's all these different things. And it sounds like radiation therapy, like you're too much exposure or not. Like they don't know what it is. So I want to try to unpack it. So maybe we'll start with what the heck is gamma and like why should traders care about it if they
hmm
should care about it? I guess that's the first part.
Yeah. Okay. So first of all, the classic definition of gamma, right? It's a measure of how much an option's delta will change when the underlying asset price moves $1. So for whatever reason in the options world, they always picked a dollar, right? So, they measure the delta as well the same way. And volatility or vega was measured on a 1% move in implied volatility. But gamma is that. So how do I say this relative to the retail trader? So the way a retail person is going to use gamma is different from how a pro would use it,
Mhm.
right? So my background coming from the pro side of things, we were market makers. We built up inventory in option positions, long, shorts, a hodgepodge of everything. We never went out and said, I'm going to do a butterfly or I'm going to do an iron condor. It doesn't work that way. We responded and were reactive to the way the markets were presented to us. We provided a bid and an offer. If they traded there, we took it. We took the other side. That would result in residual Greeks to us, right? And the residual Greeks were delta, gamma, theta, vega, rho. The more important ones that had needed immediate attention were delta and gamma and theta to some degree. Okay, and I don't know if you want to go down that path, but we can talk about that. Vega and rho were kind of less important, right? You could inventory those a little easier than the other ones, but gamma was critical. And the reason gamma is critical is because to a pro, you want to be delta neutral across stock price moves. Okay. So a market maker in the old, now look, I'm talking in the real old days. We'll talk about how it's changed over the years in a little bit, but in the real old days, you would measure your exposure by how much your delta changed as that stock price would make a move up or down. Well, gamma was responsible for that, right? And classically, if I own options, I'm going to be long gamma. So we used to call it curvature. That means that when I'm long gamma, when a stock goes up, my deltas get longer. Seems like it's a good thing, right? You're getting longer as the stock goes up. Conversely, as the stock goes down, when you're long gamma, you get shorter deltas. Okay. Also seems like a good thing.
And that's mainly because the stock is now approaching that slope of the payoff diagram as it goes further and further into the money, theoretically.
Right, exactly. So gamma, gamma doesn't happen much at a 100 delta option anymore, right? It can't, if it keeps going in the same direction for a 100 delta option, it can't go more than 100 deltas. It's over,
Right.
right? So they tend to have they're tapped
Mhm.
at that level. And most of the trading typically done around at the money.
Right.
So that's where gamma is most exposed. That's where it's the
So so when we talk about gamma, like, so this is, and you tell me if this is a good way of thinking about it.
Hmm?
I've always thought about it. This is gonna be crazy. I'm probably, if my daughter ever listens to this, she's gonna be like, "Here you go again, Dad, talking about this." Like, I literally talk about like gravity. Like, I try to teach my kids sometimes about like gravity, and it's like uh how it distorts time and space,
Yeah,
right? And I think about gamma as like a function. So the stock price is gravity, but gamma can accelerate and move faster, or it can move slower, right?
yeah,
Depending on where you're at. So, and that's really, is that the right way to think about it? It's like gamma is how fast an option's delta will move, or how
yep.
slow an option's delta
Yeah,
will move.
yeah, that's good. I mean, I think too. I've heard it explained as I can't remember which term they use, but delta is speed and gamma's velocity of that speed or something like
That's a
that.
good one. Yeah.
Yeah, something like that. But yeah, that's absolutely true. Now, I would say that gamma to a retail person, and correct me if I'm wrong here, is probably a measure that isn't needed to.
Nobody looks at it.
Yeah,
Nobody looks
and
at it.
I get it. I
Yeah.
know why, and I think that's fair because think about it. And I think your community does a lot of short on condors. Correct me if I'm wrong
Yeah.
there as well.
Yep.
So
Yep.
let's say you're pushing those out. Well, what is your exit strategy? It's got to be if I sell it for $1, I want to buy it back for 50 cents
Right. Sure.
or something, some metric thereof, right? And if it goes to $1.50, maybe I'm stopping myself out, right? Does gamma come up in any part of that equation for a retail person?
No.
No. What comes up for a retail person is price, right? So I am sensitive to price. Now, behind the scenes, price is going to be doing something because gamma might be doing something. We get it. But do you need to understand that relationship? Probably not. What I think a retail person needs to have is a reason for entering the trade. Okay. And I don't know what that reason is. It could be I like Elon Musk and I think his cars are great. Therefore, I'm going to get long Tesla. Making that up, but that could be a reason.
Sure.
So the critical part for the retail person isn't necessarily the Greeks. It's how do I plan my exit strategy before I even enter the trade. And I think that's a lot what Option Alpha does. You already have an exit strategy built in there. Now,
Well, yeah, and I think the other part of it too, though, is this other idea that of like, well, how could we use gamma levels or gamma exposure
yep,
to better plan a strategy? Based on what, because you were talking about like what market makers will do and what the pros will
yep,
do with inventory. So, like, how should we think about that? And maybe let
yeah,
me.
that's the important part.
Right, right, and that's
Okay,
what I was trying to.
yeah,
What I'm trying to get to is just from my own understanding too. Is like, how do we even think about stuff like this? Let me show you this, and
yep,
then we can kind of take this wherever you want to
yeah,
go.
and yeah, I have very strong beliefs on this one, so this will be good. Okay, so this is
Okay,
your
good.
gamma exposure.
Okay,
Your
so this is
index.
the new gamma exposure stuff that we have.
Okay.
And I'm sure by the time even maybe this thing comes out, it might even change or be different or
Mhm.
adjust as we go. But this is what we got. How can I get I need to get you back in here because I want
Oh,
to
I think well,
see
I can
my
see myself
screen.
up top. Yeah.
Oh, you can see it? Okay, good. All
Yeah.
right. So this is the gamma exposure, right? Now,
Mhm.
this was a snapshot I took, this particular one, because I'll show you one later, but this particular one was taken at like 10 o'clock in the morning today.
Okay.
Today. So this is the
Wait.
zero DTE contracts. So I look at this and I go, okay, so we've got open interest, which is basically a snapshot from yesterday, right? Because
Yep.
we don't know what's going to happen throughout the day with all the volume.
Yep.
So like that's one thing we have to put a pin in, like come back to like volume versus open interest and
Mhm.
how helpful that is or not. But then you have these gamma levels, which is like your net exposure at different things, and you've got all these peaks. And so I guess using this maybe as like a springboard to start thinking about this, but like how are maybe how are market makers or like pros
Yep.
trying to move around this if retail traders are not directly looking at it? Like nobody gets into an iron
Yeah.
condor going, well, I got into it because of this gamma level, but maybe they should start to do that like a,
Yeah.
like a pro or understanding what's going on
Sure.
in the back office. Does that make sense?
Yeah, no, I get it. And we do a lot of speaking on this too. So let me just give a little background. So if we know how dealers or market makers behave, which we do, they 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 tend to be delta neutral. Gamma will throw their deltas out of whack, in which case they have to do something to neutralize it.
Hmm.
So what's
Let's use an
typical?
example. Yeah, maybe
Yeah,
a good
yeah. Let
example.
me give you an example. I'll just do like let's say I was a market maker and I had a position in Apple, and I was long gamma at the 230 strike. Okay, and it started moving up through that strike, and I'm getting longer deltas. Okay,
Hmm.
my mo as a market maker is if I'm getting longer deltas, my goal is to always be near zero deltas. So if I'm getting longer deltas, what do I have to do? I've got
So
to sell stock, sell something. I got to get short. I got to sell calls. I got to buy puts. I got to sell stock. The easiest thing for a market maker to do is use this underlying stock market. Okay.
because it's one, right? Is that is
It's
that the
one.
reason?
Yeah, it's
One
100
delta.
deltas.
Mhm.
Yeah, it's easy. It's liquid. Apple's liquid. It's you just hit a button and you've sold your shares. And
Mhm.
now you're at zero again until the stock moves again. And if it goes down, I get shorter and I'm going to buy those shares back. And I'm going to constantly do that. So you can imagine with a strike like this, if there's a lot of long gamma around a strike, what's going to happen?
Mhm.
Typically, not always, but typically, it's going to go up above the strike. The market rate is going to get long. He's going to sell it. That's going to put pressure on the stock to come back down to the strike. And if it goes back down through it, he's going to say, I'm long now. I'm short now. I'm going to buy it. And it's going to kind of that sticky strike syndrome that happens. Now, there is a caveat. Okay. And you might not like this answer, but I'm going to say it anyway. All
I
right.
like real answers. Yeah.
Here's the real answer. The SPX is a $1 trillion notional market. Okay.
Mhm.
And let's pretend your numbers are correct here. And we're looking at, I can't even see what these numbers. Is this 5 billion? Is that what that is?
That was when I took the screenshot. It was 6.5 billion.
Okay. So think about what 6 point, and that's
That's
about
total.
right. In
That's
SPX,
total.
that's
Yeah.
about accurate.
Yeah.
Think about what 6.5 billion is relative to a $1 trillion market.
Hmm.
It's minuscule. Okay. So my little asterisk relative to SPX in terms of gamma clusters and Vana and Charm for the community is that it's probably not as prevalent as a measure as it is in a stock like GME, GameStop. That's a different animal because now all of a sudden our notional is some small number and the
Compared to
market
what's in
maker
there.
community holds all of the cards in that one. And then his or her or its gamma exposure and deltas can get way out of whack really quickly and it can really bleed on itself.
So can I interrupt and ask a question?
Yeah, please.
Does that mean that in those, call them less popular tickers, even
Mhm.
though GME is probably a super popular ticker, but like
It
in
is.
those ones where the community of market makers could be a few people or one person, does that mean that those levels are stickier, or does that mean that,
It,
that what like does that mean that those levels would be stickier?
it depends on what they have, right? So if they're long gamma, yes. If
Mhm.
they're short gamma, no.
Then
They're
it's
less
just fluid.
sticky,
Yeah,
right?
less sticky.
Because don't forget about short gamma. As it goes up through that strike and it keeps running, they're getting shorter and shorter and shorter. What do they have to do? They
Yeah,
have to purchase, let's say, stock to hedge those short deltas.
right.
That's pushing it up even
That's
further. It's
just
like a
going to send it
it's like a
even.
double bounce or a big wave
Right.
that comes in, and then the tsunami comes, and then there's another wave behind it that pushes it even further because you got the market maker kind of moving that stock as well. And what is the specialist doing in the stock? He's like, wow, everyone's buying stuff. Guess what? I'm getting out of the way. Right. So it perpetuates itself.
So would it be safe to say then that in a generally positive gamma market, you find that things are going to be a little bit more sticky because market makers are going to hedge their exposure at these levels versus in a more negative like negative gamma market. Those levels are an acceleration point where they
Yep.
get to them and they start to accelerate
That's
potentially.
right. You said it
I
just
don't know.
perfect. I'm not even going to repeat it because you said it just right. With the caveat that SPX is probably not
The stickiest. No, that's good. It's good. I mean, there's probably something in there. Maybe if the levels are high relative to
yep.
the market that day, well, which maybe we can get to. But so you were saying too, it's almost like, and I'm just visually thinking in my head because I think in analogies and I'm
Sure, me too.
visual.
I'm the same way.
But if I have a pool and the pool is getting a little bit high and I take a little bit of water out of that big swimming pool, you're
Mhm.
not really going to notice it. It could feel like you're taking gallons of water out of it,
Right.
but the pool doesn't really adjust, right?
It doesn't.
Versus if I have like a baby pool and I take a gallon out, you're going to feel it.
You're going to feel it. Yeah,
Right?
think of the
Okay.
ocean. Yeah,
Right.
exactly.
Okay.
SPX is
Got
like
it.
the ocean.
Okay. Got it.
Yeah. So I think in the community, your community probably remembers the meme stock adventure with GME, right?
Sure.
So that had interesting components to it. Part of it was this gamma clustering because the market maker was short all those out of the money calls because
Everyone was buying them. Right.
the
Everyone was
community
buying
bought
all
them.
those calls. Right.
Yeah, they said, hey, too cheap GME, we believe in it. Buy, 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 buy. Illiquid market, no one's playing it. You're Mr. Market Maker standing there with all the cards, all shorts on the upside, right? And it starts moving. And then the hedge fund says, "Oh,
We got to buy stock to buy stock.
I've got a lot of stock to buy. I got to cover. I got margin calls. I got
Right.
to."
Right.
And then now the market maker's getting short. He's got to buy more. And then they're buying more calls, and the market maker's selling more calls.
Mm-hmm.
And that was the Vana effect that happened there, which is second order Greek that measures a change in delta relative to implied volatility changes.
Mm-hmm.
Okay, so that happened to him. So it was a three-part kind of a thing that happened that made that accelerator really push it to the metal.
Right. That's like gasoline on fire.
Yeah, it absolutely right. It doesn't happen in SPX so much. I've seen it a little bit. I think people do look at these levels. It's not bad. Would I make my whole trading plan around it? Probably not in SPX. I would certainly look at it in other stocks if you have the tools, which you guys do, to take a peek at that for sure.
Right. Okay, so let's take a look at this one just to like kind of figure out, okay, even in SPX, what is this even saying to us? So this was at the market like 30 minutes after the market open or so.
Yep.
So what is this actually, from your perspective, what is this? And by the way, the backgrounds are volume for the day, and I'll show you one for today.
So let's pretend
backgrounds are volumes for the day.
Yeah. Let's pretend this had tons of meaning. I'm assuming that huge spike is a lot of gamma at that.
Yep. 40. Yep. That's the net. That's the difference between call gamma and then this the bottom is put gamma. So this is the difference, between them. So like the net gamma at the 45, 60, 64.50 was super, super net positive.
Okay. So yeah, the people who are sitting with that are, they're long gamma, longer when it goes up, shorter when it goes down. They're pounding this to that strike, right? And my guess is that if this were the case today, the S&Ps would probably be up or down very little, and it looks like they're only down about 6 points.
So that's the crazy thing is actually today. Not that this would happen every time, but I'm glad we're doing this on a day where maybe some of this stuff starts to make sense, maybe to me. But it has traded basically at 64.45 for most of the day.
Yeah.
And it's traded right around it.
Right. And yep. And
that's about normal.
That's about normal. That I could see that with this dynamic here with the long gamma. And it's obviously in a typical normal stock. But here's what happens now. So let's say it does drift beyond the 64.50 strike. So it starts drifting down, let's say.
I'm going to go to the one for today. I'm going to switch over and go to the one for just like right now. And we'll see that. I don't know where it's drifted. I think it maybe has.
Yeah, it's down a little.
Solidified.
Yeah. So when we get.
Oh, there we go. One to this one here.
Yeah. So see the lower part of the strike. See where it is 64.40. Once we start and pretend like we don't see that negative bar down there, that's negative gamma, let's say, and it's just flat. Well, once we get down to that zone, the market maker is fully hedged. At some point, he's going to have 100 deltas against all his stock, and it's fully hedged. So now it's a no zone. Once he gets fully hedged, that gamma spike doesn't mean anything until it gets back up toward that spike again.
So up to here. So this is nothing. That's a no.
Well, yeah, it's 10,000 in SPX. I mean, it looks like it's 10,000 negative of what I can tell. Is that right? Or is it
Yeah,
10
the
billion? I can't.
net gamma exposure here is 1.2 billion.
Yeah, and that's minuscule in the $1 trillion
Right,
market. It's nothing.
right, right,
Right.
right.
So yeah, once you get fully, even on the short side, when it goes through all the shorts and you're way up above and there's nothing there, then it's over. It's going to waft, technically relative to what the market maker can do to it. It's not until the trading community reestablishes a new zone with gamma that it'll become important again. Does that make sense?
Yep. So
You have
basically,
to
it's
have
got
these
to,
spikes again. They have to reestablish position. So they have to roll this stuff. They might roll it. They might close out this old, 64.50 strike and roll it up to a new place or out of the money. Who knows?
which I've
So,
seen that happen during the day, like just watching this a couple
yep,
times. Like you will see this one, for all intents and purposes, disappear. And the
yep.
next one will show itself at 64.85 or
And
something.
that's a function of the marketplace doing its thing. There's people are moving that out. They've
Right.
got their value out of that one. They're rolling it to some other. But the old saying, right? Roll out and up or whatever it
Right.
is.
Right.
That's exactly what's going on here. The trading public is it's at a new level. It's fully hedged to the market maker down below. It doesn't matter that much anymore. And now new zones are going to start to become established.
So in this case, like if you look at where the market is right now, which is 64.40 and change, so it's just very, very calm, right? It's basically got this huge level, positive gamma exposure level here of
Yep.
64.50. Would that be acting as like potentially some resistance,
Yeah,
right? Like,
sure.
again, it's SPX, so it's,
Yeah, pretend like it meant something in terms of size. But yes, if
sure,
it
sure.
does, it's going to run up there and it's going to sneak through, and then Mr. Market Maker is going to be like, okay, I'm getting long deltas. I'm going to probably sell a few.
Okay. And then because they already are probably perfectly hedged right now, right? They don't care about anything. As the market goes down, they don't need as much short. I mean, they don't need short stock, right? I mean,
No, they don't need anything. The only thing
they
I can
don't need
see is that
anything.
yeah, there's no big zones established down to the downside really.
Mhm.
So they're just going to trade as normal. They're going to buy and sell options and hedge them with whatever they hedge them with.
Gotcha.
In that zone, it won't be any kind of keynote levels. Let's say um,
Hmm.
in that last diagram. So
Okay. Gotcha. So it won't be like any meaningful level. But if they did have like a positive level down here, would that mean anything? I'm just trying to like,
could be a support level if it's positive gamma because
it
it's going
would
to
be another
they're
support.
going to get short and they're going to be like, oh, I need to buy, 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 buy. So I'm going to start accumulating on my positive deltas there, right?
Gotcha. Okay. Makes sense.
Yep.
So let me ask this question during the day. So this is all super helpful, by the way. Like this just kind of talking through this and then like
Okay.
thinking about it, very helpful. What impact does volume have during the day on any of this stuff? Because we can see open interest, like we can
Yeah.
track open interest, but this is a day removed, right? Because we don't know what the net effect of everything is going to be. So I guess the two-part question is, does open interest for a trader or market maker play any part in this, just knowing where that is? Or does volume, how does volume play into this as well?
Yeah. So good question. I always first preach to the retail folks. Um, when you're going to trade a product, take a peek at the open interest first. Okay.
Mhm.
And why I like that is because that's inventory that's been built up and it shows that there's interest in the underlying product.
Mm.
Okay. Volume can be a 1 or 2 day event and it disappears, right? And open interest tends to be a little bit stickier. So it's for me, it's a combination. I like to see open interest and good, solid open interest. If you look at the Mag Sevens, they have tons of open interest in
Right.
addition to tons of volume. Now, why you want volume? Markets for especially for retail people, they get tighter with each price discovery. The
Mhm.
more that's trading in between bids and asks, or even on bids and asks, gives new pieces of information to the whole marketplace. So you want to have a lot of that two-way paper so that market makers can, kind of make the best possible market. So when you have that, you're going to get tight, liquid markets. That is great for a retail person because
Right.
they've got to give up edge to get into the marketplace, right? They're never buying a bid or selling an offer. And I've had them actually
Sure.
tell me that. I said, I'm going to tell you something, and I'm going to hate to break your bubble, burst your bubble. When you buy a bid, it is now the offer, just so we're clear. Okay.
Right.
It's the market maker's
You
offer.
moved it.
You bought a
Right.
bid.
Yeah.
Okay. And you'll never see that. Trust me.
Yeah. Yeah. That's good.
So,
So actually, that's a good point about like the inventory that's been built up. So if you're looking at open interest, I mean, obviously these are the big strikes, right?
Yep.
6,500, 50, 65, 70. But what that's, if I'm articulating what you're saying back to you, what you're saying there is like, hey, there's inventory that's been built up here.
Yep.
So,
And
and
that's
I'm
long,
like,
right, Kirk? What you're showing me there, that's long inventory.
yeah, that's like, so these would be, yeah, 6,500. Yeah, those would be 13,000 calls. And
Yeah. So I mean, think about it. That's all positive gamma. If
right.
those are all long options, it's all positive gamma.
So that's why you're getting all this positive gamma here, essentially, is
Yeah,
from that inventory that's been built up.
that's correct.
Gotcha. Okay.
Yep.
Makes
Yep.
sense.
And look at it. Who knows? It could trade out. People could close them. You don't know.
Well, of course, we
Or
don't know
maybe,
what today is.
yeah, and you
Right.
don't even
Yeah.
know. You don't even know. Especially in SPX because it's cash settled. It just expires in the cash, so it doesn't really. They're not going to take delivery of anything.
Right.
You
Right.
know, so it
Right.
doesn't.
Yeah.
That's the beauty of SPX and why I love it for retail folks. European exercise, cash
Yep.
settled. You don't have to worry about much of anything other than making good trades.
Yeah. Yeah. I had a guy email in a while back and he was on a trip with his son, fishing. If you're listening to this, you know exactly who you are. And I know I've been there before where you just kind of freak out and you forget. And you're like, and he got assigned SPX at the end of the day, but it was
Right.
just the emails for cash settlement. And he was like, oh, what's going to happen? How many shares am I going to get assigned? And I was like, it's just cash settled. Don't worry.
Yeah, no, that's why this is a great product. I think this is, one of the best that was ever made for a retail person,
Yeah.
right?
It takes
Yeah,
that
yeah.
whole side of it just
Oh
completely
yeah,
out. So,
yeah.
okay.
It's
So on the volume then, so if you, so what would you be looking for in volume? Like, would you be looking for just a crazy out of the left field spike in volume? And
no,
but would it tell you anything? I guess
yeah.
that's the question.
So with that, any kind of crazy, unusual activity, let's call it, and that's what they tend to refer to it
Yeah.
as.
Yeah.
That's something that is outsized, outlier sized volume in a particular strike or whatever. Um, is SPX going to really move the needle? Again, it's the same, analysis that I've just given on the size of the product. In a particular stock, like, back to our GME example, if
Mhm.
you see a 20,000 lot trade in GME, okay, that normally trades a couple hundred contracts, I hate to say this, but to me, someone knows something.
Right.
Okay. And I don't know what it is they know yet, but there are probably statistics, and you being the data miner that you are, could probably
I don't
figure
know.
this out. What happens to an option that is unusually active? Does it always go up 600%,
It's probably
800%?
those like probably a politician, like a bill is going to get passed,
I
right?
don't listen. I wouldn't put it past. They were
I
allowed to
wouldn't
do
put it
that.
past. Yeah.
Right? So, but
Yeah.
that to me is interesting in terms of volume. Volume is kind of like, the weather barometer, and what we like to see is constant. Unfortunately, in this scenario or this example, we like to see constant rain. I want to see volume all the time. I don't want to see unusual volume. As a market maker, because they
Hmm,
don't want to see that.
that's true.
Why? Because they have to hedge that. They have to hedge that message. All they want is ones and twos and fives. They love that. And guess what? That's why they're willing to pay for it. That's why there's payment for order flow, because that tells them something about the marketplace.
True.
That's how price discovery happens in the marketplace. And it's important for the retail community to be a part of it. And people don't understand this, that I would rather trade, tons of little ones and twos and threes all day long and hedge them as opposed to 1,000 lot. I'm like, oh no, I don't want. What am I going to do with this? It's like
Right.
it's like a
That's
it's
a
like
great analogy. Just like a
a giant,
waterfall of like,
yeah.
like I can
You get a
handle a little bit
waterfall.
of rain, but they back up a dump truck,
Yeah.
water. It's like
Oh,
that's
I know. I hate to say it and be. You might have to bleep this one out, but it's like a big turd. No one wants to get a big turd dropped on them.
right.
It's
But you got
no
to
good.
deal with it. That's actually a good point that I don't think a lot of people understand about being a market maker. It's like that comes in. It's like you got to figure out how to price that, right?
Yeah.
How to
Yeah,
do.
it's tough. And there's a school of thought that in the market making community that they like the bigger trade because if they know that it is one and done and they can price it effectively,
It's a good trade.
then it's a good trade.
Sure.
But in the horror stories, like, I'm making this up. Merrill Lynch comes in the pit and says, I got 1,000 to buy. And we give them a price and fill 1,000. Then they come back and say, oh, I got another 2,000 to buy. And now I'm like, okay, my first 1,000 sucks now because I
Right.
priced it here and now I'm moving it up here. And then they come back after the 2,000.
I
That's
got
the
10.
total.
I
But I
got
got three
50.
more to do now. And
Huh?
before you know it, they've done 15,000. And your earlier trades really, really stink. If he came in one time and said, I got 15,000 to do, we could say, here's where we can do 15,000 and let's get on with it.
Mm-hmm.
So,
Interesting.
and then ones and twos and fives, back and forth, and the back and forth is important, right? So
Mm-hmm.
market makers love to be able to have that two-way paper because that sets price. That sets markets really well. And every option is related to the other, the one around it, all the way down, up and down the line. So if we have that clarity of interest in supply and demand, we can create a great curve and get great theoretical pricing, and really manage our inventory, right? So that was always the beauty to that, you
Right.
know. So
So let's look at this one. So here's TLT. I don't know. I'm just like picking up ones that are a little bit more random. We can do other ones too.
no, that's fine. This is good. This is a good one.
Switch over to Apple. We can do Apple too, but let's do TLT. It's
Yeah, that's a good
so
one because
I
it's
don't know.
probably not as I know it's liquid, but it's probably not as big as some of the other. What's a 35 million?
Yeah, that's 37 million negative.
Okay.
Yeah.
Yeah.
So
Yeah, that's
so
pretty.
what does that tell you? I guess like now looking at this, you go, okay, you got a little bit of positive gamma here, but it's basically right at the zone with massive.
Yeah.
So
So
would you be looking at that going, huh, that
we
thing
could
might
have,
go
yeah,
right past it.
this could have an inflection point,
Right.
right? Inflection being this could scream down or scream up, depending. Now, look at if it, the market maker right now who has this position is just like doing one of these. I hope it stays right here, you know. But he's prepared. They're prepared for this.
So
So,
his position too is so he's negative exposure, which means that he's got long puts, right?
this looks like it's negative gamma to me. I know.
Or negative gamma. I'm sorry, negative
Yeah.
gamma.
So he's short calls and puts. I don't know which one he has necessarily, but he's net short calls and puts at this strike.
Right. So I mean, it looks like he's net. I mean, super net short puts. I assume mostly puts.
Yeah. Is that what that is? I can't
Yeah.
tell. Okay. I
Yeah.
believe you.
So 8.6 million calls, negative 46 million puts.
But he's long the calls, right?
I would assume the call open interest. Yeah, he belonged those calls.
Yeah. So yeah, I'm assuming the negative sign, but beside the put number
Correct.
is means he's
Correct.
short. Okay.
Yeah,
So
yeah.
yeah, so he's net short, whatever that comes out to be. 38, 36,000, 36 million units here, options.
Right.
And don't forget, calls and puts are the same to market makers. They're exactly synthetics of one another.
Right.
When stock's involved. So he's not just short that line. That could cause, some solid movement if it starts breaking through that. He's not going to do much. He's getting longer to the downside, which case he's going to sell more.
Right. That's so that I was going to say, and the reason like to ask the question because so he's short right now, those puts, which means that as the stock goes down, he's getting shorter and shorter and shorter.
No, opposite. So
he's getting
he's getting longer as the stock goes down.
Longer as the stock goes down. Right.
But he's negative gamma in this case because he's short so many units.
Okay. Here. Right. Yes. Okay.
Yes. And
so he's got to short stock.
Yeah, he's getting longer as the stock goes down. He's got to sell more stock or something to get himself flatter. Mm-hmm. And as the stock goes up, he's getting shorter deltas, in which case he's got to buy something. And let's just call it stock for now. But if he's doing that, it's putting pressure up on the stock, pressure down on the stock. And look, if it's dancing around, I was a short gamma trader when I was on the floors, right? And not always, but mostly. So, this is great for me. I wanted to go to my short strike. That's beautiful. What's good for a butterfly? Going to the short strike, right? Mm-hmm. So I wanted to go to that short strike. I don't want it to go too far either way, though. So let's not get crazy. I don't want it to go down too much or up too much because then I've got to start making decisions. But it kind of dances around the strike. That's beautiful. My butterfly's coming in. My condor's coming in. Whatever it is I have on is coming in at the short. That's what we want. It only becomes an accelerator as, that underlying drifts beyond where, we have to make a decision now and start selling stock to the downside or buying stock to the upside. Now it could accelerate in those directions.
Interesting.
In light fire. Right.
Interesting. Yeah. So basically it's either going to stay right here or it's going to start accelerating out.
Yeah. Once it starts drifting, it's almost like, you know how you start a little bonfire and you finally get it lit. And it's kind of lighting a little bit. And you're like, okay, I wonder if this is going to happen. Anything's going to happen more. And then all of a sudden a little bit more lights and then a little bit more. And all of a sudden it's like this conflagration of, flames. Well, analogously, that's when this thing starts moving from that short strike. It's starting to flame. You got to start putting water on this baby or you're going to get hurt. You're going to get burned.
And in this case, it could run up to here before
Yeah.
somebody else starts saying, hey, hold on.
Yeah.
We got to start peeling this back just a little bit.
So what happens up at that green bar potentially is that all the short gammers run out. You probably hedged it the whole way up. You're out of hedging ability because it's
Quick, maybe
and you
quick.
run into a
Maybe it
long
ran in quick.
spot. And now you can start selling it again above that strike, that whatever that green strike.
Interesting. Right. Yeah.
Make sense?
Okay, makes total sense. So you're looking at this. None of this is financial advice. This is not a
No,
recommendation for any trades. We're just going through this in hypotheticals. But
that's right.
hypothetically, if you're looking at this as a trader, are you going, okay, I'm going to set up an iron condor around this zone, or I'm going to set up maybe an out of the money position
Yeah,
this way. So if it blows through, I've got some bearish exposure down
sure.
below this strike.
Yep.
Is that like that? Is that how someone should be thinking about it?
Well, again, you said the right words, NFA, right? Not financial advice.
Right.
But what would be interesting, okay, at that big, huge red downward spiking spot,
Mhm.
assuming implied volatility were participating in the correct way, is to get long one of those iron butterflies or iron condors, the long side of it, because you want movement.
Right.
Okay. So I'd probably, and if vol was at the right place and I could do that, I would probably consider that. And again, I don't know the time frames here and everything and how much
It's
time.
zero. Yeah.
Yeah. So I may try to get into that cheaply with the expectation or the hope that, if this starts drifting away, someone's going to have to really push this. And now all of a sudden my butterfly is going to, if I bought it for a couple shekels, it's going to go to maximum value and I'm going to get out or near
Sure.
maximum value.
Right.
So we want movement as retail people. We're looking for movement at that short strike. Now, look at there's no guarantees. The market makers could be right and it doesn't move and it just kind of wafts around that strike and it expires around there and they clean up and you lose on your long butterfly. That could happen,
Mhm.
but probability wise, it's probably a spot where you could get a little movement somewhere along the journey here that you
That
can,
starts to fan the flames.
yeah, fan the flames. Correct.
Interesting. So,
Yeah.
okay, if we go out to a different expiration, I'm just throwing something out here.
Yeah.
So this would be like September. So 30 days. Okay, now before we even get into this,
Mm-hmm.
the further out that we go, how much of an impact are we talking? And like, is
Yeah.
all the stuff that we're talking about muted because it's further out?
The second part, the latter. So yes, the farther out you go, the more muted it gets and the less significant it becomes. I would say, again, not knowing if there's daily expirations or zero DTEs, I'd like to choose within 20-ish days to look at. So 20
Okay.
days of
So
expiration.
39 days, 32 days, it's like no one cares. So
Yeah, that's about where it starts to care. 30 days is the zone where ice cubes start melting, right? And theta starts happening right around 30.
right.
Gamma starts kicking in a little bit, right around 30. But again, 20 better, 10 even better. So I like to see the zero DTEs as a choice on the JEX, and then maybe go out 10-ish, 15 days if you're able to do that and look at that whole structure.
Yeah.
You know.
This is about 10 days right now.
Yeah, so that's interesting. Still,
Yeah.
still very interesting. I like it. What stock? Oh, it's TLT still. Okay.
Still TLT.
It didn't change a ton. It's similar.
Yeah, it
So
really doesn't change too much out there.
yeah, I don't
I was
look
looking
anything
at
beyond 30 on this stuff.
Okay, yeah. So I was looking at four and I was like, well, four is interesting. You still got that big one, a lot
Yep.
of positive gamma up here, couple little over here. I don't know.
Yeah.
Let's look at a different one.
And the other thing you can do too is we don't know if this is some big time spread, right? So it could be a 60, 10-day time spread, in which case maybe he's got so much 60 out there that, I'd probably take a peek at it to see if there's any mitigating factors that reduce that little zone, just to take a look if I add more strikes or expirations to it. But, I doubt they have something that's 180 days versus a 10-day, that would
Right.
seem odd to me.
Yeah, that would seem odd. Okay. What other one do you want to look at? Well,
Can you pull up GME?
yeah.
Just for kicks, because that one's always fun. I want to see if it's the same pattern. It's not actually. So, and what expirations do you have chosen here?
This is a 4 days. So
Can you choose multiples at the same time?
no, just one at a time, but we can just
Okay.
talk right back and through them.
I gotcha.
Just
Okay.
go through those.
Yeah, so it looks like the upside. If that's the market maker position, they're all long. They're long gamut of the upside, right?
So this would all be like massive overhead resistance.
Yeah, it'd be heavy up there. It'd be heavy. Market
Right.
makers aren't going to let this one get away too bad. They're going to be selling into this.
Interesting. Okay.
Yeah.
Right.
Yep. Usually you see in GME, you'd see the opposite. You see shorts to the upside and longs to the downside, maybe, or just short.
Yeah.
Yeah,
No,
this is flipped the other
all
way.
positive all the way out.
Yeah.
Yeah.
And what about
I know I was trying to find one that's
yeah, if I want to find a classic one. Let me see. Yeah. Go to I'm trying to think what's that. Mm, what is that a front month?
that's the cues today.
Yeah. Go to like a 10 day in that one, see if there's anything out there. Yeah, a little more shorts there.
Mhm.
Interesting. Yep.
Is that pretty normal, you would say? Is that like when you say
What's
like a
normal
classic?
is, what's normal in underlying stocks, single names, is for the market maker to be short downside, right? And long upside. So we're kind of seeing it. There you go, like that.
Mhm.
Why is that? Because what do most retail investors or investors have? They have long stock,
Mhm.
generally. They own portfolios of things. What are they taught and typically do? They buy downside puts to protect it, and they sell upside calls for income, or they put a collar on, or they just sell upside calls. So if they're selling upside calls, who's buying them? Market makers. So
Right.
they're typically look like what you have here. Market makers are typically long gamma the upside because the investing public is selling those things,
Mhm.
right? And they're buying puts for protection, the investing public. So market makers are selling it. So it typically looks like this for a market maker. Does that
So
make
is
sense?
this why? Yeah, totally. So is this why? I don't know why I've never really thought about it till this moment. So hopefully I can get this thought out.
Yep.
Is this why when we have such a sharp decline in stocks, and it just often happens where it's like we get to these points
Yep.
where it feels like the market breaks and races lower.
Yeah.
Did it is it a
It,
function of mainly like, okay, all these market makers, they were short gamma exposure here, and then they had to sell into that to hedge,
yep. That's all. Yep.
and it's
All
just
part of it.
forcing it all down.
And accelerates it too. So that's
Acceleration.
a
Sorry.
huge
Yeah.
part of it, a huge component.
Mhm.
Imagine if, look at when I did this way back when there were, 20,000 market makers. There's 12 now. Okay, there's 12 market makers and they all have the same stuff on their sheets, more or less. There's more exchanges than market maker entities,
Right.
right?
Right.
In options. So that says something, right? They all
Mhm.
have the same positions all the time for the most part. They're doing the same kind of things. So that also says something.
Which means again that they don't always have to hedge with stock either, right? I mean, they could hedge with something.
No, they don't have to. And here's what I tell you too. And I'm trying to make this a little simplistic.
Yeah.
And reality is that most of these market making firms now are exactly that. They're not market makers anymore. They're entities. They're firms.
Mhm.
They have a massive inventory of options across all of their products. They're dispersed everywhere. So, don't think that there's some guy trading in Apple at Susquehanna who's just hedging his position.
Right.
Probably not the case.
And he
They're
certainly
probably
is not
going to, yeah,
targeting you as the trader. Yeah.
no, never.
That's
They want,
always the
no,
classic thing that everyone thinks. It's like
no, that
they're out to get me. They're
they
not.
are not out to get you. They want to help you get into the market in every
Yeah.
way, shape, or form because it gives them information.
Right.
And don't forget, I keep saying this: payment for order flow. They're willing to pay the retail trader for his or her order flow.
Mhm.
Why? Why is that? Because they don't know anything about the direction of the stock. They don't have inside information. It's non-toxic. It doesn't mean they're stupid. I keep saying that.
Mhm.
Retail people are not that way. You don't think you as a retail person are dumb. That's not the issue at all. You just can't buy a bid and sell an offer. You got to do the opposite.
Mhm.
And for that, a market maker makes his living off of that fuel.
Mhm.
And they want as many of you as possible, and they want you to make money as much and as often and as happily as you
Right,
can.
because it keeps the liquidity coming, of course.
It keeps it coming, and they keep getting that information,
Yep.
right? For sure. But yeah, and my other point about hedging too with market maker firms is they have a dispersion book, lack of a better term. So they've got thousands of positions, and they've got some risk manager sitting up in a high office in New York City or wherever they are, and he's looking at the overall net delta of that book and net gamma of that book. It's all mashed down into something, and he may be short in SPX, and he may be long in QQQ, and long in Apple, and short in Tesla, and the net is they're flat
Right.
potentially. In which case, they don't care what the market does
Right.
anyway, and they make a hedging decision at 10 a.m. and at 2 p.m. Central Time, and then they're done for the day. So that's how the modern day market making firm probably evolved. They make very few hedging decisions because it's all mishmashed into one big portfolio. And they just kind of try, and they reduce their cost by only doing it a couple times a day instead of all day, every day, like we used to do.
Right. Well, because they have such a big thing, they can just press
Yeah.
one readjustment lever or two readjustment levers
Yeah.
to be done.
And there may be concentration. And when you get concentrated like in a GME, that's why I'm so stressed in these little meme stocks. They might be like, I'm strung out in GME, and it doesn't correlate much to anything else in this market or in my book. Now I better hedge this thing in and of itself. That's where you can get real flyers. Right.
Interesting. Yeah. So let's look at this one real quick. So this one is 19th expiration. So tomorrow, but today, this is SPX.
Yep.
Massive volume at this one strike. I just happened to notice this. I'm like, okay, tons of volume at the 65.35 strike.
Yep.
So just going back to this means to you, maybe a big nothing burger.
It's a big nothing burger up there. If it gets up there, it's going to have a little bit of pressure on it up there, but by the looks of that gamma.
Right. So a little bit of resistance.
A little bit of resistance up there.
Yeah.
Does it mean it can't bust through and travel beyond? I mean, look, if they come out with some wonderful news that, Russia and Ukraine are.
Yeah, then it's done. It's up to
who cares? Everyone's going to be happy and they're going to start clamoring for it.
Yep. Awesome.
Right.
Cool.
Yep.
Lex, man, this has been super awesome.
Always
really quick, what did we forget about all this stuff? What's the icing on the cake? What's the cherry on top?
Yeah, just for the gamma part of it, or just in general.
Anything, whatever you want.
I don't know. I think we covered on so many important topics. You're so good at this that you
were awesome, man. This was.
I just think adapting yourself to a retail trader is really, people can't understand how difficult it is. Okay. And I can't stress this enough. I totally grew up on the pro side of the business. Okay. Unlike anything you and I do currently. And I will be the first to admit that as a retail person, I'm probably not very good at this. Okay. At the trading part of it. Why? Because I learned something totally different.
Right.
I have a whole different mindset of how my inventory reacts and works. It's from a pro standpoint. Whereas a retail person has to have a trade idea generator. And I don't care what that is, as long as it's good. It can be directional, it can be technical, it can be fundamental. I don't care. But it's got to be something. And they're looking for more price enhancement than they are managing a Greek curve. Does that make sense?
Well, and it makes a lot of sense because most retail traders are not going to have, to use your words, the inventory to need to manage that kind of stuff.
No.
Potentially, right?
Because it costs them money to get into the position. Why? They have to work between the bid and the ask. Mm-hmm. And every time you do that, you give up some edge. So they're giving negative edge to the equation when they get in. Now, that's okay because you have time value on your side, right? And what you're looking for in the most simplistic form is I'm paying $6 so I can sell it at $8. It could be at 8 in 2 months, 2 minutes, 2 seconds, 2 weeks. I don't care as long as you can rinse and repeat that concept over and over again. And if it's using your bots, love it. And I like bots better than anything because it takes emotion out of the equation, right? And I highly recommend people do that with you because that emotion is the worst thing for a retail person. It's the worst thing. And most people are guilty of it. If you can set it, and I don't want to say forget it, but make
the Ronco style.
Right. Yeah. Just set it and have a good system.
We don't ever say set it and forget it. Yeah.
Yeah. I mean, you don't want to have emotion override sanity. That's all there is.
That's a good point. Yeah. Our first post when we were originally launched, by the way, was called automated, not unattended. And that's correct. What basically.
I love that.
Yeah, same thing.
Yeah. So anyway.
Awesome, man. Well, listen, Lex, appreciate it so much as always, buddy. It was good chatting through this.
You too, always. Thanks for having me.
I appreciate being on here. We'll give everyone everything in the show notes right below here. That way you can reach out to Lex and the whole Tradier team.
Anytime.
All right. So I'm glad you guys got a chance to listen to that one and watch this podcast episode. don't expect us to do video podcast episodes every single time, but in the cases where it makes a lot of sense to be looking at these different gamma levels like we did today, we will definitely do it. So I hope you guys enjoyed this one. As always, if you need anything at all, please reach out to us. We'll put all of the links to the show notes and all the different resources right below the video description for this. Or if you're listening on your podcast app and you're listening to this one, go on over to the YouTube channel and watch this one if you want to take a look at all these gamma levels. This is going to be a really, really fun one to hear what everyone said and how you guys use these moving forward. Can't wait to hear it in the comments and in the community. And until next time, happy trading.